Your brand new iPhone deserves the best protection, and the iLune 3-Pack Screen Protector plus 3-Pack Camera Lens Protector has you covered. Don't take risks with your iPhone. Click the link in the video description to shop now on Amazon.
Welcome to Microsoft Sphere, where we dive into the latest news and trends in the tech world. I'm your host, and today we're talking about MSFT stock, which surged more than 10% after Microsoft's strong earnings report. So, what's behind this impressive performance? Well, let's take a closer look at the numbers. The company delivered a beat on the bottom line, with earnings per share of $3.46, $7% higher than forecast and 17% higher year-over-year. That's music to shareholders' ears, folks. But what really caught investors' attention was the strong increase in cloud spending. A key reason for MSFT stock's weakness in the past few months was a decrease in cloud spending. But this report shows a 33% jump, with 16% of that increase attributed to acceleration in artificial intelligence infrastructure. That's a bullish sign, if you ask me. Now, some might say that buy-and-hold investors are too focused on quarterly earnings, and that's fair enough. But Microsoft's report was not entirely unexpected, especially after the company reported a drop in cloud revenue last quarter. And yet, the stock still rose sharply before this report, thanks to cautious optimism from investors. But what about the risks? Well, there are certainly some concerns out there. First quarter GDP numbers came in lower than expected, and inflation is rising. The word stagflation is rearing its head, which could impact growth. And let's not forget about tariffs, which Microsoft expects to have no impact on its forecast. So, what does this mean for MSFT stock? Well, analysts are already starting to raise their price targets, with many estimates well above the previous all-time high. Wedbush has even posted a price target of $515, which is a significant increase from previous estimates. Long-term investors are undoubtedly cheered that Microsoft stock has made up its entire loss since March. The strong post-earnings move has pushed the stock above its 50-day simple moving average, which is seen as a sign of positive momentum. And with Apple's recent strong report, it's clear that tech stocks are on the rise. Now, let's talk about valuation. With the recent surge, Microsoft trades at 34.8x earnings, which makes it expensive compared to its historical averages. That could mean less sentiment to move the stock higher in the short term, but investors should pay attention to volume in the coming days for confirmation of this bullish trend. Before you make your next trade, keep an eye on these top analysts' recommendations. MarketBeat tracks Wall Street's top-rated and best-performing research analysts and the stocks they recommend to their clients on a daily basis. And if you want to stay ahead of the curve, be sure to check out our exclusive content, where we reveal the 5 stocks that top analysts are quietly whispering to their clients to buy now. That's all for today, folks. Thanks for tuning in to Microsoft Sphere. I'm your host, and we'll see you next time.